Good morning, everybody. It's your daily crypto news for Tuesday, October 31st, 2023. It's Halloween. Happy Halloween to everybody. I hope you're going to have good fun trick-or-treating later. Please stay safe. And by the way, it's Bitcoin's white paper's birthday, 15th birthday to be exact. Without the Bitcoin white paper 15 years ago, we would not be where we're at today. Listen to daily crypto news. Let's get into today's weird daily crypto news. It's a weird news day. I think everybody is trying to find more things to talk about the spot Bitcoin ETF. And everybody, meaning the media companies, because there was a lot of a lot of attention onto it, and now they don't know what to do. So now they're trying to find contrarian views or controversial statements about why a Bitcoin ETF will be bad. Some of them are really good ideas, but that conversation has been being had for the past decade. So any conversation that is going to be had now has already been priced in, if you will, to the conversation and talked about in length, and there's very good poignant statements to this. The ones that we're going to talk about today aren't so, and that's why I could say like the media companies are just being kind of weird, trying to get those clicks, trying to get that attention onto their news. Here's one. Do Bitcoiners even want an ETF? And this is a headline from Decrypt by Matt DeSalvo. Good guy. I've spoken to him about news many times over the years, but this article really is, again, kind of weird. Doesn't have any statements to it. First thing he starts out with is like Hayden Hughes. He's a co-founder of social trading platform Alpha Impact, and he says that the approval of a spot Bitcoin ETF has already been priced in, meaning there's a low chance that the price will sustain any massive gains. Didn't add on that. Doesn't say if that's until there's a spot Bitcoin ETF. So that means that the price is priced in from now. Like the whole hype or the expectations or the anticipation of a spot Bitcoin ETF is priced into the market right now. That I can believe. If he's saying that it's priced into a spot Bitcoin ETF after a spot Bitcoin ETF launches, that is false, because number will go up. So again, weird that they didn't have more to that. Continuing that statement, continuing this like idea of do Bitcoiners even want a spot Bitcoin ETF? He talks to Bob Bodley, a CEO of Ordinals marketplace Bionic. He said, as long as you can have self-custody, then you can be a unique individual participant in the Bitcoin network. If Bitcoin ETFs become the only illegal way to access Bitcoin, and self-custody is illegal like gold was back in the 70s, then it would compromise Bitcoin's core value proposition because people couldn't legally self-custody their assets. I understand this idea, I guess. However, I don't think that it's really feasible or possible. Even back in the day in the 70s, if you had gold, you had gold. You kept your gold. I mean, you weren't going out spending your gold anyway, so you had your gold. Making it illegal is not a good thing, but you always had your gold. And I think Bitcoin is even harder to even enforce that. How are you going to do that? Anybody can mine Bitcoin. Anybody can mine Bitcoin. Are you going to go to people's houses? That's going to be an invasion of privacy to say, hey, you're using too much energy, considering the energy consumption to mine Bitcoin is equal that to about, running a couple PS5s. So it's going to be really hard to enforce that. And then again, how many people are self-custodying Bitcoin as we speak? What are you going to do? What are you going to do? You go grab their Bitcoin? I just don't buy that. They're not going to make it illegal. They're just going to there's going to be easier on-ramps to get Bitcoin. There's going to be a lot of KYC AML through Coinbase. You're going to have financial institutions get a spot Bitcoin ETF. And most people are just going to do it that way. And there's going to be this, I guess, counterculture of hodling your own Bitcoin, self-custody, and ledgers with your own private keys. And I think that's going to continue. He continues to say that Craig Raw, he said that privacy and profits don't always go hand in hand, okay? Institutions care about their bottom line. Sometimes their goals will align, sometimes they will not. Again, has nothing to do with the article in my opinion. The only thing I think that really holds weight here is what Caitlin Long said. And she said that while such products would be great for the industry, the financialization of the crypto world could be bad if it leads to too much liquidity from leveraged traders wanting quick short-term gains entering the market. That I could see. That there could be this like interesting downstream or second, third, fourth order effects when it comes to the liquidity in the market in general. But it's not that the spot Bitcoin ETF is really a bad thing. And do Bitcoiners even want an ETF? Depending about privacy, depending on what you really think Bitcoin will be good for. And honestly, I think that if you are a libertarian that wants to change the financial system, the banking system, and so on and so forth, getting Bitcoin even further in the banking system is going to actually help perpetuate that. And because we're talking about a long-term sort of plan, not just a 10-year, 20-year plan, right? So anyway, what do you think? Email me, matt@dailycryptonews.net. This next article is also, I think, weird because it says why Bitcoin ETFs is making Bitcoin miners nervous. Again, trying to be this counterintuitive counterculture of a Bitcoin spot ETF, which I think also doesn't hold much weight. Stacey Elliott, who wrote this article, starts this article off saying that Bitcoin is up 100% this year. Mining stocks have surged. Bitcoin adjacent firms are up as well. And they may also suck capital away, that Bitcoin ETF could suck capital away from stocks that investors have now treated as the next best thing. Again, I think that's a just a weird argument to make, because the reason why there is the next best thing of Bitcoin adjacent firms or mining stocks and so on and so forth is because a Bitcoin spot ETF wasn't there. And so, yeah, it'll suck money away from it. And that's honestly an overall good thing. Now, why are miners nervous? Again, I don't know. Because they said, like, over the years, mining companies have been used as proxies to get access to Bitcoin exposure in public markets. It'll be interesting to see how these vehicles will impact public miner valuations, as investors will now have a more direct, cost-effective way to access the asset class instead of buying, shares in miners or mining themselves. But again, I think that that's a bad argument because miners make money in three ways. Number one, the price of Bitcoin. You mine Bitcoin, you get mining rewards. The price of Bitcoin, you make profit. And so if Bitcoin falls below a certain price, we all know that there's a certain price that miners are not profitable anymore if you have a certain hash rate, that if it falls below, say, 20,000, 15,000, 10,000, you're going to see miners shutting down. If Bitcoin goes up to 60,000, 100,000, 200,000, $1 million, you will be more profitable. And so therefore, the miners will be making money. And then that goes to two. How do you make money? You get your Bitcoin. Number two, people invest in your company. If you're a public company, you're making more profit because Bitcoin price goes up. You're making more money. You're mining more Bitcoin, mining the same amount of Bitcoin, getting block rewards, but making more money off of that block reward. Then the company will get more investment via stocks, so on and so forth. They'll have more money to maybe have stock buybacks themselves, or they will sell said stock to have more cash on hand. And so higher Bitcoin price is good, right? So miners aren't going to be negatively affected. The only way that I think that a miner could be negatively affected is the hash rate goes up. You're going to need more power, more mining power, more hash power to mine Bitcoin efficiently. Then you will see energy prices go up. And so you'll have this kind of the break-even price for mining Bitcoin will go up. You know, it will say it was 20,000, it'll go up to $30,000 Bitcoin. And then if you have a $6,000 Bitcoin, you have that spread of, mining rewards. You can sell power back to the grid in Texas. So maybe they'll need all that. The price of power will go up. And so they won't be selling power back to the grid. That's the only way I can see that this could be bad for miners, that Bitcoin price go up because of a spot Bitcoin ETF. It's not going to negatively affect them. And to say that people will not invest in miners because of the spot Bitcoin ETF will give them access to Bitcoin instead of getting access to miners, which used to be their proxy for accessing Bitcoin, that's silly, because you'll still buy stock in miners because number go up, you're more profitable, and you want to own profitable companies, right? Again, weird arguments to try to say that a spot Bitcoin ETF might have issues. I'm having a weird day where the articles that I'm reading do not make sense, and they do not come to logical conclusions to what they're trying to, or the argument that they're trying to have. And this has just been the theme today. And the other thing is that there's a lot of clickbait. Like, for example, this one. The clickbait is Unibot promises to reimburse stolen funds after being exploited over $600,000, meaning that I'm reading an article about Unibot being reimbursed. However, when I click into the article, it doesn't prove that case. The title of the article, when I click into it, is Unibot exploiter swaps stolen crypto for Ether via Tornado Cash. So let me tell you about what happened. Is there's been stolen crypto via an exploit on Telegram's chatbot Unibot. It's been swapped for Ether via Tornado Cash, and it's on the move. And according to PeckShield, the attacker first moved the stolen crypto to Uniswap and then sent it to Tornado Cash. You guys know Tornado Cash is a mixer, mixes up your funds, spits them out to different places. It's helped hackers launder over $1 billion, including the Lazarus Group, which is the North Korean hacker group. And now the attacker wallet looks like it has around $630,000 in crypto assets from the exploit, either being in ETH or in USDC. Obviously, as a result, Unibot's token drops. It's down around 31%. And again, allegedly, they pledge to reimburse the people for the exploit. Can't find it. Can't find it in the article. Search it on Twitter. Can't find it. It's probably there. I'm just saying that the articles are very weird today. And it's quite possible I'm just following what happened with Sam Bankman-Fried in court. Apparently, he can't remember a damn thing. He lost his memory. Maybe I'm losing my mind when I'm reading these articles. Monday, he got asked questions by the U.S. Assistant Attorney, Sam Bankman-Fried did, as the government challenged his credibility on the witness stand. The only thing he could say was, "I'm not sure. I don't recall. I'm not sure exactly what you're referring to." SBF said that he was unclear whether he ever claimed that FTX was safe. Okay. Sam Bankman-Fried couldn't recall whether he's seen specific balance sheets for Alameda that was produced for him by former CEO Caroline Ellison. Ellison said that Sam Bankman-Fried directed her to create a series of phony balance sheets after crypto prices tanked so that they could keep their lenders confident in Alameda's strength. What do you think Sam Bankman-Fried said to that statement? I don't recall that. But when the prosecution asked, in private, didn't you say things like "fuck the regulators"? Sam Bankman-Fried, he remembered that. He said, yeah, I said that. Anyway, that was your crypto news today. I hate making videos like this, but I'm going to try to get better at it. I want you to do me a favor. Like, subscribe, share, leave some comments in there. Send me emails, matt@dailycryptonews.net, and I'll see you tomorrow. And until then, happy spooky hodling, everyone.